Hello and welcome to the home of high probability trading. My name is Tim and I'm one of the traders here at the live trade room. And what we're looking to do is trade the US Open fully live and interactive with real capital. So we'll go through the process involved in I suppose, setting up our what we refer to as high probability trading opportunities, and we explain to you almost why we categorize trades in that way. There's lots of trades across all sorts of different markets. Profitable traders in our experience are a little bit more focused on exactly what they're looking to get into, and probably more importantly, why they're getting into that trade. Like, is it purely a technical trade, which can be quite erratic? Do you have fundamentals behind that move, and also sentiment as well? And that can vary and that can shift quite a lot. So that's what obviously makes trading a little bit more challenging. But if you are someone that is genuinely interested in learning how to trade from a knowledge of, I suppose, from a position of knowledge and understanding, let's say, then we can certainly help you as an organization. So we've got a wealth of products and services. We've got over 50 hours of high quality education in our members areas for our traders, and we trade markets live every day. We have our trade plan webinar every night at 9 o'clock. It's towards the close of the trading day, so that's quite an important time frame to be able to make some decisions about what's likely to happen. So we're always looking at these markets from a probability perspective. So we've got a vast range of products and services, from our risk management software through to our education and our daily live trade rooms. So we can be really quite supportive in this environment, which is quite tough and challenging at times. And we can do that for very, very small monthly fees for as little as $15 per month. So depending on where you're from, it can be much less than that. So for more information, just go to our website, thelivetraderoom.com, and feel free to speak to any one of us through the website if you wish. Okay, so without further ado then, let's see if we can make some cash this afternoon. First of all, please see our risk warning currently up on screen. It's just important that you just take note of the risks involved in trading these financial markets. Let me see. Good afternoon, David. Great to have you back again. I'll address a few of those in just a moment. So just very, very briefly, perhaps we'll have a look at some of the news flow. We'll just want to see if there's any major news events that we need to be mindful of in today's session. So today, Tuesday, the 20th of April. Tomorrow is a little bit more a little bit more going on, perhaps, with some of the central banks towards the end of the week. But today, we don't really have a huge amount to deal with. We had a positive claimant count change this morning, and anyone trading in the New Zealand dollar, just be mindful there's a quarterly CPI figure out. But as you can see, for the remainder of the afternoon, nothing of any significant importance with these markets. Something that's been in the news an awful lot and very impactful in these markets are the bond markets. A good sort of standard bearer is the US Treasury, 10-year Treasury, and you can see this is an annual, so we had a really strong move to the upside, and prices have just recently tapered off, so it's just calming anxieties. Let's say we're up at sort of 175 not so long ago, so we're up at these levels, 175. 1.75, and we've been as low yesterday as 152. So really, we got this sort of quite calm market condition, let's say, at the moment. Just on kind of the news front, there's some ups and downs regarding the Brexit, the vaccine rollout. So there's some concerns now in certain jurisdictions of the fast spread of the actual virus itself, although the rollout is sort of moving along relatively nicely. but certain jurisdictions are really sort of finding it difficult. A lot of the major data points are all relatively positive, so I suppose it's a kind of a strange little environment, and we're kind of seeing it a little bit in today's price action. So we had a little bit of momentum, sort of continuation moves overnight, and that is slowly just unwinding quite significantly. We'll have a look at the S&P. It's probably a decent place to. Sorry, the euro dollar. We're actually above this is on a daily time frame now, so we are we're above the 200 period moving average, the 50 period moving average, and prices have now pulled back to the 100 period moving average. But you can see that there's a little bit of a pullback in today's move, so that just puts a little bit of question mark in your mind. Where are we at regarding the indices? They're taking a little bit of a rollover trade to the downside, aren't they? So we peaked last night up at these highs in here. We've gapped lower, and then we've sort of failed to make new highs, and we've got 2 or 3 hours of just a bit of capitulation before yesterday. And now we've got 3 or 4 hours of further capitulation. So our bias is still firmly to the upside, and we're very, very close to all-time highs once more. Normally these pullbacks are very, very shallow, or relatively shallow, but it's not to say you wouldn't get like a sharp spike like we've seen here. So we need to sort of build that into our thinking. But in terms of a market condition, we're looking at risk-off market conditions. So we're seeing a bit further sort of downward pressure on these markets, as you can see, and it's pretty much like that across the US markets. Now, this is why we trade the US Open. So we've got the largest influx of capital entering this market in about 35 minutes. So will that provide a little bit of an uptick in the fortunes of these markets? It does quite regularly. Yesterday we saw sort of markets very slowly grind higher, and the FTSE's taken a bit of a hit. We'd like this market to come back to the monthly high around the 6,800 level, something like that. So that can come back a little bit more, and there might be some decent buying opportunities there. We had this explosive move to the upside in the DAX after 8 days of sideways moving price action. So very little price movement here. Let me get my pen up. David, I'll come back to just your comments. I'm conscious of your comments there, and I'll just give me a couple of seconds. So we had this little sideways moving, very narrow sort of band, and then we get the 1 day explosive move. So at this point we're thinking, right, well, now we can get the continuation trade above this high. And as you can see, price has actually failed to actually get above that level. So very close to getting into that, but I suppose this is why we do like to focus on daily support and resistance levels, or daily highs and lows. And it does help you with that decision-making process. So it would have been a false breakout trade if we had pulled the trigger, but you want to see the break, and then same on smaller time frames. You want to see the break to the upside, and you then need to see the follow through. And if you don't get a follow through, then the previous high may very well become resistance, and that can keep you out of a few false breakouts. Now, anyone that trades breakout trades, it's a fundamental part of trading breakouts. You're going to get a certain percentage which are reversal trades, and I think, David, you've referenced, I think, the gold market. That's not a bad example, actually, now in just a second. So I'll come back into it. But we just had an explosive move to the upside. So you get your confirmation to the upside, and then you want the follow through, and it fails to arrive. So we get a pullback. So it just might mean there's a bit of an opportunity to get in at a lower price, which would be great for these equity markets. The Nikkei is selling off quite significantly as well. Just quickly flicking through the dollar. Dollar weakness, which is what we've been talking about for the last couple of weeks, and you can see what the beneficiaries of that is the euro dollar, the pound dollar. We got this move up to the upside. We've had pullbacks across most of these markets now. we've kind of failed to make new lows in the dollar yen, running into the 50 period moving average. So there's a strong level of support in this market. So that's the dollar yen. We're just seeing this market create a bit of a floor here in and around the 50 period moving average, and we're seeing a bit of a push higher. You see, we are technically just pulling back off the highs, and it's finding a bit of support. So it'll be interesting to monitor this little high in here. We've got these daily lows just above it, and we've got these levels in here. So we're trading inside this little zone, and if the dollar starts to find some strength, we can expect some short-term dollar yen strength, as in the dollar yen pushing to the upside. It's just, it would need to clear these highs to actually be a continuation trade to the upside. And what we would just be mindful of as traders is trying to mitigate risk fairly quickly on this trade, because if it fails to make a new high, then what we want to be mindful of is this rollover trade below that level. So in situations like that, you can see the slow nature of the pullback. You want to see prices start to push higher. When that starts to turn, that's probably a decent opportunity to perhaps book in profit, get out of the trade, whatever the case may be. So it's just managing the price action carefully. Okay, so the dollar yen is finding a little bit of strength as we stand. Same situation with the dollar Swiss, but you can see that the commitment from the pound, the US dollar it's not, there's lower amounts of volume in the trade, and prices are beginning to just roll over again. So we had the dollar CAD squeeze to the downside today, and now that's reversed pretty much back to close to the open. The pullback off the high for the Aussie dollar, and sort of 60% retracement on these markets. So, and we're seeing this across other markets as well. I noticed, David, you mentioned, I think, the Brent, the oil markets, and we're seeing the same situation there. So it is because that market condition has just tipped a little bit more risk off than previously risk on. Sorry guys, I just wonder if you could just bear with me 1 second. I'll be with you. Hello everyone, welcome back. Apologies for that slight disruption. We've got sort of 8 or 9 minutes, so we'll put together this trade plan and we'll kick on for the session. I'm sorry about that. It was an unavoidable call, I'm afraid. Okay, so we were just going through the market conditions. We're in a risk-off market condition. You can get that information very simply from the indices markets. They're let's just say that they are negative for the day, so we could expect a little bit more strength creeping into the dollar as a result. They're negatively correlated, so and I suppose how we sort of qualify that really is that the S&P had ticked higher for a period of the day, and then that's kind of rolled over to the downside. So if you look at it on the hourly, this is overnight pushing higher, and we've had this little rollover trade to the downside. So we do have US capital coming into these markets now. So we can prepare ourselves accordingly, really. It's just there's a high degree of uncertainty with these market conditions, so we're not really getting full-on sell-offs in the indices, and as a result, we've got some pullbacks in the dollar weakness trade as a result as well. So we've got to be a little bit careful. Overnight, we were looking at continuation to the upside for the pound dollar. As you can see, that kind of rolled over. Just going back to a quick question you had there. So you were in a short on the sorry, David, I'm just looking at your messages now. So you're in a short on the euro pound. Yeah, that's kind of the logical trade, really, especially with the rejection of the high. The level at which we would have got into this trade is below the 85, 86. We get in once we get the confirmation that we look for, which is normally a break of the daily high, the daily low, or some other important level of support resistance. But so it's just trading around that 50 period moving average on the daily time frame as well. And the only thing you've got to guard yourself against is, there's nothing wrong with the direction of the trade. I think you're looking for a sell trade. So yeah, you're short. So you're looking for pound strength. That's fine. We were looking for pound strength last night as well, against the dollar and the yen. Not so much against the euro, because the euro and the pound were both quite strong-ish. Although the pound, I agree, was stronger. But the level to pull the trigger, certainly for us, was either Sunday night when the markets opened at 86.51, or down here at the 85.86. So what's that, sort of 60 odd pips difference between those two tradable opportunities. But today, now we've opened up, we just sort of moved sideways for a bit, and now we've just retraced that move. And what you need to guard yourself against really now is the structural failure. A market that had been moving sideways, we'd been looking for multiple selling opportunities, creates a low. We get the bounce back, and what we're interested now to see is whether we get a coherent bounce, first of all to the 87.11, but then potentially above that is your high probability structural failure trade. This is when a lot of these sellers, this is when they start to panic, and when they start to panic, it can create, you'll have stop losses placed at these highs up here, and they'll be liquidating positions, and you'll get, it's that psychological point at which the sellers start to freak out, and the buyers are likely to see a little bit of momentum at that point. And try to remember when you're learning how to trade the financial markets is that any particular market is just nothing but a battle between buyers and sellers, and it's who's winning out. And generally you see price and volume will tell you who is winning out on the trade. So, and it can be short term, it can be over 10 days to the downside, or it could be 3 days to the upside, and it's up to us to just navigate that accordingly. So sort of, David, just loosely, in our opinion, I'm not sure what your entry price was, but we kind of look to get confirmation with trades at very specific levels, not just, you might have been getting in below the 8600, I don't know, which is a psychological level. So whatever metric you use for your entries, we prefer to base it off levels of support and resistance, and daily highs and daily lows prove themselves to be that over longer term. The other one that you were looking at is the UK oil. And I was discussing earlier about the but look at this price action. So what we can do is we can just take this high and just, we were looking at this today as well for a move above the 63.93 level, but look at it on the smaller term time frames. So overnight we had just grinding price action, just pushing higher, and we would be very interested around that 63.93. But look what happened when we got to our trading desk this morning. Let me get sort of the general timing of it. It was around this high. It was somewhere around, that was the high at which we were wanting to see some continuation, and we were just tracking these markets as we entered the European session. So let's see that. So this was around the European Open where we started to see prices just tick to the upside, and so we'll take this little high here. But the reason why we didn't get into it is this is our break at that level, and that's on the 15-minute time frame. That's not conducive to a sell trade. Same with the next 15 minutes. So this is when patient needed to kick in, and then on the third 15-minute candle, we saw the impulsive move to the upside, followed by a bit of a rejection at a high. So again, it builds this little picture for us, and then we see the next candlestick. We think, right, well, now we clear this high, we're off to the races, and we'll be getting in, and we've now finally got the liquidity coming in, which comes in at various different points in today's move, and this is just the next leg in that series of bullish price action. But lo and behold, we failed to make a new high, and we start getting a very important signal with this, which is a bit of bearish price action. You see prices just continuing to push lower eventually. So we actually got very close to getting into that trade as well, just unable to pull the trigger. We saw the market close above, which is great. The second part of that is the follow through, and we, as you can see, we weren't able to get that follow through to the upside. So almost, it sounds a bit silly, but the exact price we get in is not hugely important. It's more the structure at which we're getting in is a little bit more important to us. So making sure that we just we have the boxes ticked when we trade these markets, and we want to feel a little bit more confident about those opportunities. So you can be left with a pretty straightforward decision to make. So when that doesn't happen, we just have to back off and just practice and be a little bit. Hi Finbar, good to have you with us. You're on your lunch break. good man. Are you in anything yourself at the moment as well? Let us know. We've just got some pullback moves across most of these markets now today, so it's I mean, this is sort of 3-4 days of price action that's got this broad upside to it, which is really why, David, you were looking at buying UK oil. Nothing wrong with the sentiment. We were speaking about it yesterday. We would anticipate this will be pushing higher at some point. So again, it's just getting caught up in a little bit of chop. So all you experienced really was a bit of a false breakout. So it's likely to push higher. It's just the timing of it is just not great. So sometimes you have to get into that once or twice before you catch the winning trade. So we just referred to it as the right trade, the wrong time. So don't beat yourself up too much about it if you can. Yeah, it suckered you in, finally broke the range, but you chased it, got stopped out. Now it's retesting. I'm cautious. Yeah, all of that emotion is absolutely fine. it's to be expected. But it is a false breakout. So so that's how you can sort of internalize it. So it's one of those trades you have to take a small loss, and this is why just making sure that you understand how much capital you're committing to a trade. We have a strong focus on risk management. So work out how much capital you're committing, make sure you're comfortable with that. If it's too much, or if it's a large percentage of your account, then maybe look to reduce that a little bit and just be nice and disciplined with your own capital. Sometimes a really obscure trade that you get into turns into one of your biggest trades of the week, and it happens all the time. So we trade the structure. We don't want to get too emotionally hung up on any particular trade. It'll fly or it won't fly. But what we can do is control our exposure, and we can mitigate risk as quickly as we can. So that's how we can be very proactive. Yeah, so these news events, UK payroll went down, but employment went up. Some of the data points can be a little bit misleading because the markets are really focusing on the macro events, the opening or potential closing of economies, and how that's going to play out. So a lot of the data points, even some of the US data points over the last 6-8 months, have been uninspiring in terms of a reaction to basically massive numbers. So really it's about central banks, it's about the COVID vaccine, it's about I suppose the ability for a health system to kind of cope with the situation, and then things like unemployment, falls into line, and manufacturing and services, which we have towards the end of this week. So all of those things begin to kick in. So yeah, Finbar, you're in the dollar CNH. Do you mean the dollar Swiss, perhaps? CHF. The dollar Swiss. So are you in this to the long side or to the downside? Just let us know. So look, we'll put up our trade plan together. We're looking at these markets off screen, and nothing is really happening just yet. So so let's look at so we do like this market to the upside. So what would be interesting for us in a market like this is to, you see, this is sort of horrible price action, really. Certainly not enjoyable. Oops. I keep doing that, sorry. So we've got this little sideways moving pattern for the majority of in fact from last night, basically, isn't it? So just drifting sideways, 15-minute candlestick. So we can expect some dollar strength to potentially be creeping into these trades. It's even hard to identify where the potential buy trade exists. Okay, it's a bit easier to see actually. So around the 139.16 is your next buy trade. It's when you run into levels of support and resistance. If that breaks through and it falls down even lower, then you're looking for the markets to continue to the downside, and you'll be looking to get in around the 138.60 levels. So either way, you're looking for the next buy trade in the pound dollar. So this is, unfortunately, this is where sort of a bit of patience begin to creep in. Traders will be looking to buy, even just the basic pullback without these markets finding a little bit of support at prices. So it looks like we could break through to the downside. So our buy trade is not looking fantastic just yet in the pound dollar. So we might come back to that in a second. So we put the pound dollar in here. I tell you what I would like to do is to look at the euro dollar, just to see that on the daily time frame, just to see what's happening with the euro dollar. So we like this market above the 120 level, so we'd be looking for buying opportunities above that level, selling opportunities below it. Some of the other markets, yeah, look, we'll monitor the euro yen as well, because that pound strength was an interesting opportunity for us. Sorry, I think I just turned off my squawk. Let me turn that back on. Okay, good. So we've got the euro pound. We'll put up the pound yen. Okay. So there's a strong rejection of that level. So this is bouncing off a bit of a floor. So a rejection could actually mean some yen strength beginning to creep back in. So is this a session of dollar strength? It certainly looks like it's creeping in. It's creeping into these markets, and the reason for that is risk-off market conditions. So there's let's say a negative sentiment behind the US indices markets. Let's put it like that. Will the capital in the US come into this market and start to push prices higher? That's what we would like to see. We're not really seeing it just yet. It's just creating this bit of a low down here. So we'll just monitor the risk on, risk off nature of this market. Okay, we'll put the New Zealand up, because we were speaking about that last night. It's a little bit difficult to see some of these. We can see the rejection there on the right hand side. And the pound dollar is just rolling further to the downside. Okay, so look, we'll get to grips with this. Okay, so it looks like it's going to be a session of dollar strength. So last night we were looking for dollar weakness and pound strength, and we're getting the opposite. Now we're getting dollar strength and pound weakness. So that gives us a bit of a problem in these markets. There's a technical sell trade available on this little pullback. It's still only technically just a pullback off the high, so it's going to find some support. So, you know, if prices bounce back to the 39.16, we'd be looking for a buy trade. So we're not going to sell it at 139.61 because we don't know when the level of support will be created. But when it does, we look to get in. And if there's 50, that's on a daily time frame. How far? Okay, it's quite a distance below, actually, isn't it? The 38.68 level. It's way down at these lows. So we just need, this is not your high probability trade, just to pull back off the highs. When it creates a bit of a floor and then kicks to the upside, then that's your higher probability trade. So just be mindful of that. So let's see if we can get a coherent position. See, we're trading below the highs, so it's a high probability buy trade around 39.16. High probability buy trade. So that's the point at which we would look to get into this trade, actually, which is, it's a bit of a riskier trade, but if we can find some support, just looking at previous highs and looking to get in and around that type of price, then that would work well. So buy trade around this level in here. Sorry, it's a bit higher. 39.16. Okay. We're just monitoring the euro dollar. So we were still looking for buy trades above that 120 level. Let's just see how the dollar yen is performing. So the dollar is clearly stronger than the yen, so we wouldn't have massive confidence over the pound yen. So we prefer to get into the buy trade in the dollar yen. Sorry, the pound dollar, should I say.
For me, sometimes the reflection is far more present than the thing being reflected.
Little mini structural failure to the downside now as well. So right, it's not a great market to be calling just now. So let it do its thing and see if we get another opportunity on the daily time frame. So this is a market which is kind of trading around the 50 period moving average, which is technically the 86.19 level. We're only a little bit above it. If we got that structural failure trade, so at what price would we expect some continuation on this market? Well, in and around these current prices. So how can we use that information? We can look to trade the structural failure of this range. So so there is your consolidation. Price is pushing higher and lower continually. We're not interested in that trade, but we would be interested in a sell trade below the 86.17 level. If it breaks above the 86.30, then, and it's a really tight range, then you'd expect further upside. So we're going to look for a pound strength trade. So looking to trade this market below the 86.16 level. So 86. And we're already looking for sell trades previously around the 86.38. So we're in the same kind of ballpark. So we put this down here. Really, you're wanting a structural failure. So this would be a structural failure to the downside. You'd want to see that in the pound dollar to be able to buy it, and you'd want to see that in the pound yen. So it doesn't look like we're getting any of that right now. The S&P's sort of stood up for the first 20 minutes of the US Open. That's mildly encouraging. So the S&P 500.
Sitting here in Switzerland, an update there on the vaccine. Swiss government to get 200,000 fewer Moderna vaccine doses in May. Just a heads up then, 10 minutes at the bottom of the hour, we get the Philadelphia Fed non-manufacturing index, and we'll also get the Canadian Terranet National Bank HPI for March.
Okay, so that's our Squawk service just on the background.
Fed non-manufacturing index, it is for April reads.
So this is a structural failure trade to the downside, so you'd have to expect further downside opportunities in this. What changes that is the potential for a structural failure. So that's when markets push lower, fail to make a new low, and then we'll start seeing price and volume begin to push higher, and we'll take this general level, and that's your high probability buy trade. So that's when the markets are showing us that we're in this psychological shift. Like currently it's to the downside, and it will be like that, but it's the shift that we're interested in, both to the upside or to the downside. And that same shift occurred to the downside. It's a little bit more messier than we would like, but you can track a small example of this where the market made a low. We're sort of slowly edging higher, and then we kind of fail to make a new high, and then prices start to reverse. So that is that psychological shift we talk about all the time. Yes, it pulled back, but the move has occurred. So it was when some of these buyers that were getting in at this level, it's when they exited those positions, and you see a bit of a drastic sell-off, and this is what we kind of look for. Okay, so So we're not really looking for a buy trade just yet. We're just monitoring the price section. If it can get back up below this monthly low, I'll tell you what I'll do. I'll get this yellow line out of the way, because that's now up here at all-time highs. That's all that color signifies. And a lot of the purple lines on the screen are just intraday levels. It's just where we're capturing, you know, sideways moving patterns. So a lot of the horizontal lines, you're looking for the ones that are kind of relevant to today's price action. Some of them are just historic. I could probably take a number of them off. Right, so we unfortunately do apologize, but we need to end this this room here through our YouTube channel in a few minutes. So we're looking at a buy trade in the pound dollar, looking to buy this market above the 39.16. So of course what we need for that to be the case is we need prices to pull back even further. We've got another sort of 40-50 pips to the downside before that buying opportunity kicks in, and we want markets to perform as per expectations based on support and resistance. So they're not just arbitrary numbers, they're levels that we can use. You know, we trade support and resistance, and we see how price moves, and we trade the price action. But you know, a pullback, we would be looking at these levels. The next level down would be somewhere up here.
A comment here from PBOC's Lee says China has insufficiency of long-term capital.
Okay, so it's just, you know, we need it to squeeze back further actually before getting into it. They're all just having a bit of a pullback today, so really not good quality opportunities as things stand. And you need something to be the catalyst, and we're not really getting the signals that we would ordinarily like. So the gold market is just sort of doing nothing at those levels. We had a false breakout to the upside. We had been range bound for 2 or 3 days, and today we had an impulsive, but then a false breakout to the upside for crude oil. So again, not great. And then we've got sort of, let's say, mildly weak US markets, a weak FTSE, a weak DAX, and significantly weak Nikkei. So we're talking about risk-off market conditions, and we'd expect the dollar to find some strength. We just don't have great opportunities to get into dollar strength trades today. Now tomorrow that will be different, because the pound might see continuation to the downside, and we can look at these as like a triple or a quadruple high. And yeah, there's an argument to suggest there might be a sell trade. Same with the euro dollar below this 100 period moving average. It'd be a reversal or a rejection to the upside. There's a number of these markets that, if we see dollar strength creep in across the board, could give us really good opportunities for that dollar strength trade still. When we trade, we want to be mentally free to be able to change our minds and go where we see the capital moving to. It's not so much about our own personal opinion. We want to base it on price and volume and what price is doing. So I suppose we're students of price behavior, and we're wanting to see what is happening to price and who's in control of markets, and what is the commitment of others in this market, not us. We don't have the capital to impact these markets in any way, shape or form. So it's the people that do impact these markets, your big financial institutions. It's what are they doing with their money, and what they're doing at the moment is taking it out ever so slightly out of markets like your indices markets, and they're putting it into, I'll use the term loosely, safe havens like the yen and the dollar as a result. And that's the trade right now. If you wanted to force me to get into a trade, I'd be looking for the equity markets to sell lower and the dollar to strengthen a little bit. The problem is the quality of the opportunities are really quite poor. So for us, we want to be probably a little bit more patient during these conditions. We want the markets to kind of change that sentiment and give us some equity weak strength and some dollar weakness. That's the trade we're kind of gearing up for. And when we see days like this that just don't perform as per expectations, that does make it a little bit more challenging for us. So it looks like we're going to be a little bit patient today. We'll keep an eye on these markets and see if market conditions change. And we don't want to necessarily change our trade plan, because tomorrow that trade plan might turn around and we might get the opportunities that we're looking for today. So I suppose just patience. There's the three pillars we talk about when we trade markets every single day. It's about being consistent in your decision making, being disciplined with your capital, and the third one is be patient. Jumping in and out of markets like this with I suppose with these little reversal signals, they might turn into good trades, but they're, from a probability perspective right now, they don't rank that highly. So we want to try and stack the odds in our favor a little bit more wherever possible. So look, on that note, guys, we'll have to wrap up this broadcast. I'm sorry we had a little interruption halfway through. Apologies for that. But we will be back again tomorrow at 12 noon. So if you can subscribe to our channel, please do. Give us a thumbs up. We do have a lot of content coming online
the Terranet
pretty
National
soon.
Bank HPI month-on-month from Canada coming in at 1.5% on a prior 0.5, the year-on-year 10.8 on a prior 9.8%. We're getting the Philadelphia Fed there, non-manufacturing full-time employment index at 7 versus a prior of 8. Seeing the regional business activity index 36.3, better than the March read 27.4. The wage and benefit cost index coming in slightly softer, 26.2 in April on the March read of 26.3. The firm level business activity index 21.5 in April, softer than March's 26.6, and the new orders index coming in at 7.6 in April, softer than the 14.5 in March.
Okay, so they're news events that are not likely to have any significant impact on anything. So it just remains to be the case where kind of limited opportunities, markets are moving in the opposite direction to what we had planned for, and therein lies the difficulties. So we want markets to act as per our expectations, and if that's the case, we've got a little bit more confidence to get into those trades. So just a little bit of patience, it looks like, is just required right now. Bide your time if you can, and yeah, and I'm sort of looking at the oil markets just off screen, and yeah, they're looking like they may very well even roll further to the downside. So look, on that note, thank you very much for joining us. Give us a thumbs up if you can, subscribe to our channel, click the bell notification as well.
The report there from the Philadelphia Fed non-manufacturing index is on the board, and the Canadian at Terranet National Bank.
And you shall be notified. Look at the strength coming into the dollar. Not quite into the S&P just yet, but certainly into the dollar. There's a strong rejection trade around that 120.39. So there's a couple of opportunities. They're just largely medium probability opportunities, and we'd rather I suppose wait and be patient for sort of better quality opportunities. So look, on that note, thank you very much for joining us. For more information about any of the products and services and how we help traders become consistently profitable, just go to a website there, thelivetraderoom.com, for more information, and we'd be happy to help if we can. So look, for everyone here, take care. And don't forget, we do trade and we plan for opportunities, and we have live trade rooms every single day. So we hope you can join us, and we'll be back again tomorrow at 12 noon. So from everyone here at the Live Trade Room, take care, and we'll speak soon. Bye for now.